Hello, hello. Welcome to this week's episode of Online Store Success with me, your host, Jodie Minto. I have a very special guest today. I have Matt Byrne from Day One Advisory. Now, Matt is actually, for anyone in my mastermind or anyone who recently did E-Com Ads Academy, a familiar face because Matt came in and was kind enough to do a series of training events with us on cash flow and profit planning for your e-commerce business. Now, Matt owns a business where they are specialist e-commerce accountants here in Australia. And honestly, it's a breath of fresh air. I know when I had my e-com business, my accountant, I hope he's not listening, didn't really get e-commerce. He didn't really understand Facebook ads and paying for sales and all those kind of things. So I'm so thrilled that Matt and Day One Advisory are here to offer something to folks in that space because it is a very niche, weird place. But anyway, enough about that. Hi, welcome to the Online Store Success Podcast. I'm your host, Jodie Minto, an e-commerce coach and meta ads specialist. Each week, I share with you practical strategies to help you grow a profitable online store that runs in school hours and supports your lifestyle. Let's get into it. Matt, welcome. Thank you so much for being here with us today.
Thank you. Great to be here.
I know. And then we've been having a little chat offline about all things finances, bookkeeping and things like that. But Matt, why don't you just start off by telling us a little bit about yourself and Day One Advisory?
Very good. Yeah, I'm an accountant. I started Day One Advisory about 4 years ago. We started as a general accounting bookkeeping firm that looked after everybody. And then gradually over time, we picked up more and more e-commerce clients. And I have a bit of a passion for it because it's an industry that is usually underserviced because you've got, like you said, you might have a general accountant who is doing everything and they don't understand the nuances of e-com. And so we dived further into this and I got more involved in it and started to get a really good understanding of how the app stacks work. And I just find it interesting. I also think because we specialize in it, we can add a lot of value. And as a result, we've just gone further and further down that path. And now we really just deal with e-commerce clients, and we specialize in that space. So we've got a team of the 6 of us at the moment, and we look after Australian-based e-com clients from all the way from bookkeeping and integration setup and cleanups through to sort of tax advisory and more complex cash flow planning stuff.
Awesome. And I know we were chatting about that you're going to be doing some training and offering a community in the new year as well for e-commerce founders, particularly in those early stages that need some training and guidance around your financials, around bookkeeping, around profit and loss, things like that. So I will certainly share all of that information in the new year once it's all live and going. But
awesome.
Thank you so much. Thank you so much for being here. I mean, there's so many different directions that we can go in today that I'm really excited. I'm just not really sure where to start, honestly. But I think thinking about my clients and thinking about my listeners, one of the biggest challenges e-commerce and product-based businesses face is cash flow or lack of.
Yep.
And I've always said that and tried to explain, probably not very well, so hopefully you can explain it better, that unfortunately, in a product-based business, we kind of always are chasing our tail with cash flow, and we're always generally in a cash flow negative position because we have to buy the product up front, and it could be many, many, many months before we actually then can sell it and get the money back. Yep. So do you want to talk about like the whole cash flow challenge for e-commerce folks some more, better than what I am?
Yeah, well, it's even worse than that when you're growing a business. So growing businesses is horrifically expensive, but growing an e-com business or a retail business is even worse because of the working capital you've got to have. So you're, like you said, you're buying stock now for, potentially sales in 90 days time, but you're buying stock from your current level of profit on the assumption you're going to be up here in 3 months' time. So you are not only are you reinvesting all of your profit back into the business, you've actually got to find extra money to be able to go and buy more stock to grow. Yep. And so it actually, the problem compounds. So the cash flow, it's a big problem. And until you sort of get out the other side and you've hit a certain threshold, then you're always going to be chasing your tail in cash because you're constantly going to be reinvesting. That
Yeah.
in of itself isn't really a big deal. It makes it challenging, but
Mm.
as long as you've got the right margins and you've got some, you've got margins and you've got the free cash flow in order to be able to invest it, and then importantly you've got the visibility over it,
Yep.
you'll be okay. Most of the time, where we find clients, certainly when they're starting up, there's actually just no visibility. Like people are just guessing. You're looking at,
Yep.
you're looking at your bank balance. You have no idea what's coming, and all of a sudden, like a tax bill lands, or um, you've got to go and restock, and you don't have the cash flow, or something like that. And there's all these surprises from a cash flow perspective.
Okay. I want to swing back to cash flow and profitability in a little while, but you touched on margins. So I'd like to dive into that a little bit first and foremost, because I guess that's where it really starts, right? That's where
Yep.
potentially either the loss or the profit starts is around margins and knowing what they are. Do you want to share a little bit about that?
Yeah, absolutely. So if you if you just think about it in basic terms, if you buy a product for $100 and if you sell a product for $100 and it costs you $50 to buy it, and then you go and spend $30 on ads, you've got a $20 margin on that particular product. But if your overheads or ads go up or something like that, and you're actually spending, let's say you spend an extra $30 on that, well, you're probably going backwards $10 on that product from the beginning. So it doesn't matter how many you sell or how good your reporting is or your cash flow. You're just going to dig a hole slowly over time. So
Hmm.
the starting point is you've actually got to have products that have a margin in it so that you can generate a profit, and that profit ultimately generates cash flow so that then you're not going to go backwards. And
Yep.
all too often we see, for the most part, clients don't have an understanding of what their margins are or what their true margins are. They say, I buy a product for $50 and I sell it for $100, so therefore my margin is $50. But the thing we don't factor in are where you've got to pay your GST or your sales tax. So that comes out of your sale price. And sometimes you don't get it
Mhm.
back on the purchase. You've got merchant fees, you've got packaging costs, you've got your outbound freight. All of those things erode your margin and drop it down. And when you finally then calculate what your actual margin on that product is, you might realize, well, actually, I've got a $20 margin, but I'm spending $25 on ads,
Yep.
right? And so without having a good understanding of what the margins are on each individual product that you own, you don't, it's really impossible or very difficult to plan how much you can spend on ads, how many you need to sell in order to break even, or how many you need to sell to make a profit. So the starting point, and where we try to get to is, what is the actual margin? Um,
Mhm.
how much have you got to spend on ads? How many do you need to sell to cover your overheads? How many do you need to sell to make a profit? And then that all flows on to cash flow. So that for me is the starting point, is you've actually just got to sell a product that actually has a margin.
Has a great margin.
Yeah, great margin's even better, but you got to
Yeah, yeah.
start with not going backwards, I think.
Yeah, I hear you. I hear you. So I work with a lot of people that fall into two categories. They either are designing and manufacturing the product themselves, or they are reselling. They are buying products, whether it's white labeling or another label, and then they're
Yeah.
selling. So obviously, those two categories have very different margins,
Yeah.
and it's tricky. I won't lie. For resellers, it is tricky because you do have a much smaller margin, which then obviously, if you are running ads and things like that, it makes it a very, very fine line between profitability.
Yeah.
If in the first category, for those manufacturing their products, is there a rough benchmark around what kind of margin or multiplier from their cost of goods sold to what they sell it for would be?
Um, there's never any benchmarks, unfortunately, because every industry is different and every
Mhm.
business is different. Every business has a different cost profile depending on what its life cycle's at, how many staff it's got, etc. So
Mhm.
it's not, you can't specifically say, hey, you need to aim for this. What I would say, however, is that there's, if you're ad spend, you'll know the numbers better than I. What's the sort of average customer acquisition cost these days, or blended ROAS or something? Is it
Mm,
like, what are we at? Are we
it's
at a
about
30 or
three.
35?
Yeah,
Okay.
yeah. I'd say like ROAS of three. So yeah, 30 to 35%.
Yeah. So if you've got to go and spend 35 on ads alone, and You then have to leave some left over for profit and some left over to pay your overhead costs. And again, it depends on the volume and what overhead costs you have. But as you can see, you're going to really struggle. If your margin's 50%, you're going to find it really hard because there's probably
Mm-hmm.
just not going to be enough left over. Whereas if you
Mm-hmm.
were in there with a margin of 60% or gross margin of 60%, so you're selling for 100 and buying for 40, then you've got some more capacity. So while there's no specific threshold or
Mm-hmm.
benchmark, because again, every industry is different, I would say that you've sort of got to work backwards to figure out what's not enough of a margin. And I would
Yep.
say, once you start getting to that 50% threshold, you're going to find it really hard.
Yeah. I often, for my ladies in fashion or apparel, recommend like a times four and up, if possible, from their
Yep.
cost of goods sold to their retail place. And like you said, of
Yep.
course, it depends on your market, where you sit, who your competitors are, what your brand's about, etc. But knowing what I know about all of those extra hidden costs
Yeah.
and things, even like the email pop up on your website that's then giving someone 10% off or $10 off, right? That all
Yeah.
eats into that margin. So I'm always recommending that people set their prices higher from the very
Yeah.
get-go. And we can always work backwards. We can always try some discounting if we find it's not working, or you can always drop your price. But it's harder
Yeah.
to raise your price than it is to drop
Absolutely.
it. So start high and see where we land.
Yep.
Because yeah, it's all of those different things. The GST here in Australia instantly lose 10%. The sign up pop-ups, your cost of ads, then there's the cost of all your software, the transaction fees, all of those things, right? We forget
Well,
very
even
quickly.
even things like buy now, pay later, like you're going to lose five
Mm,
and a half percent of those. That's a huge percentage
yeah, it's
of your
massive.
thing just straight away going off the top
Gone. Yep.
to your merchant. So
Yep.
there's all of these things eat into your margin. So yeah, at a very basic level, you do need that type of margin in order to do it. Now,
Yep.
the interesting thing I find on that though is, you're saying calculate four times. Four times what? Like four times the underlying like if you're a reseller, for example, let's say you go
Hmm.
and buy the product and the product costs you you know, $10. Do you do it off the base price, or do you just actually need to go in and
Mm.
factor in all those extra things that are added on
Yeah,
top?
yeah,
So
yeah.
your insurance and your freight costs and
Yep.
your storage fees and all these other things. I
Yep.
think um, I think that before you even price, you've got to go and understand all of the costs that make up your cost of goods sold,
Hmm.
because that will then at least give you some more information. Now, you might still go and do the four times that initial base price, or you might do four times your total cost.
Hmm.
But you've got to have the information as a starting point, because otherwise you're making decisions off gut feel, which sometimes is fine, but sometimes you're going to
Yep.
sort of come into some strife.
Yep. Okay. So we've touched on margins, and obviously, you touched on knowing their numbers. Like, what does that look like as far as, how does someone, if maybe they're new to bookkeeping and they're new to their business and they don't yet have a profit and loss or anything like that, like what's the first starting point to start getting some of that visibility and clarity around, okay, what are my actual numbers?
Um, there's a, there's a couple of ways you can do it. I would suggest that anyone who runs a business needs an accounting file. Go and get yourself a Xero or a QuickBooks. Um, Go and connect the bank feeds for your bank accounts so that your transactional data is going in there, and learn how to do the bookkeeping. There's YouTube videos everywhere. Like you said at the beginning, we're
Hmm.
building a community around that to help founders learn how to do their own books. So that's going to take us a while to build that. So I'm not going to make any
Yep.
promises of when that's coming. But the you get an accounting file and get that running so you can see all the transactional stuff. You then need you need a bit more information than that. So you need to get some extra data coming from your Shopify store and send it over to your accounting file. And you need an integration to do that. And the best one that we use is A2X. So you get that set up, and then that will send across data more accurately. Now,
Awesome.
that's part of it though. The bit that's missing in that is the product cost component.
Hmm.
So the all of those systems rely on you understanding and calculating what your product cost is, so that then you can put it into Shopify, and Shopify can send it to A2X, and A2X can put it to zero, so you can do your cost of sales. The way that the easiest way to do that is to do it in Excel.
Okay.
Like you can go and get a complex inventory system. They cost a lot of money and they're way overkill for someone who's starting out. The better way is to just go and get an Excel file open and do a calculation.
Yep.
We have one. You can download it from our website. I will go and
Awesome.
I can send it to you. It's a landed cost calculator, and it will.
Okay.
You put in your product cost in whatever currency you buy it in. You then put in the freight and all of that sort of stuff, and it'll apportion it across there, and that'll get you your landed cost. Put that product cost into Shopify. You let Shopify, A2X, and Xero or QuickBooks do the rest of the work for you, and that'll help you. So that for me is the starting point. Now that sounds like a lot. I appreciate that's probably pretty overwhelming for people who've never looked at these things before. I would encourage everyone to probably get someone to do the setup for you.
Yeah.
And then get someone to show you how to do it. And then you can go away and do it. The actual ongoing stuff is not complicated. It takes some time, but it's not complicated when you get how it works. But I think that's the sort of foundational app stack from a finance perspective that I'd be using. And the vast majority of our clients fit into that bucket as well.
Yeah, and that's what I do now. I had my accountant set up my Xero file with all of the, account line numbers, all that kind of thing, and then give me a little tutorial on how to do it. And now I do it myself, and I love it. I actually find it incredibly satisfying to dive into my Xero and go and balance everything out and look at my profit and loss. I probably look at it every week to see, am I overspending anywhere? Because, like you said, having that clarity and that visibility on your numbers is crucial when it comes to growing and scaling your business.
Yeah.
I want to touch on something that was always a pain point for me, and something that I struggled managing for those here in Australia is GST. Now, I in my fashion brand have talked about this before, where I got into a very bad system of not putting aside the GST and not paying it monthly or anything like that. And just, it was a later problem. And I've just got to ramp up sales now and pay more money with ads and get the money in to then pay off that tax bill that's, creeping up. And next thing there'd be like 6 months worth of BAS due. What would you recommend for someone like me who got to a point where I was completely overwhelmed and ended up with a huge tax bill? What's just a good system for someone, just so that they have that peace of mind that they are putting it aside or taking care of it, they're managing it well?
Yeah, there's a couple of things. So the first one is get a separate bank account. There's no point all of your cash just sitting in the one trading account, because you will spend it. Like, you won't know how much of that is set aside for BAS, etc. You're just going to spend it. And then the problem is you get to the BAS, cash is gone, or you've already put it into the new stock or the ads or whatever. So get a separate bank account and just sit it there for your GST, PAYG on wages if you pay it. And I would also drop the super in there as well. Now, the next thing is, how much do you put in? Most businesses, after you've been trading for a little while, you'll generally know, as a percentage of every sale that comes in, how much kind of goes across there. And it won't be 10%, because you get to claim back costs and you've got wage costs, etc. But you'll understand the percent. And then when you get your payout on a daily basis or a weekly basis, or however you've set it up, just go and take some of that and transfer it into that bank account before you do anything else. And then it'll be sitting there set aside. Now, that works great for people who've been around a little while and they understand what they can calculate the percentages. Until you get to that point, there's a couple of other ways you can report on it. The first is, if you're keeping your books up to date on a regular basis, then you can actually, in Xero, or assume the same QuickBooks. We don't use QuickBooks a whole lot in Australia. Most e-com clients use Xero. You can actually just run an activity statement in your Xero file anytime you want. So at any point in the quarter, you can just go and run that activity statement, and it will show you, based on the transactions you've reconciled, what your current liability to that point is. And then you can go and grab that and say, right, I'm going to put that number into my bank account.
Yeah,
So
great.
that's the easiest way. I'd run that, if you want to run it on a weekly basis.
I
The
have
other option,
huge. Oh, sorry. Go ahead.
I was going to say, the final option is you've got Zero in particular has on the dashboard, you can add accounts to an account watch list. You go in
Okay.
to, they've changed the menu these days, but it'll be an accounting and chart of accounts. And then you can go into the account that you want to see. So GST, PAYG, super, and just click the show on dashboard watch list. And then on your dashboard, so when you first log into Zero and you see your bank accounts with the number to reconcile, etc., on the right, it will show you the account watch list. It'll show you what liability is sitting in those accounts. And then
Okay.
basically say, right, what's the total of those accounts? Make sure I've got that much money sitting in that GST ATO liability bank account. And then when the BAS comes around, you're good. It's all sorted.
Yeah. Awesome. I have huge trauma, I was going to say, around the ATO because they don't mess around, right? And so when I hear of clients that like haven't submitted the tax return in years or
Yeah.
their BAS and stuff, like I start sweating. I think, oh my gosh, get on, they don't want I've had friends who've reached out and said, Jody, like, ATO are ringing me every day asking me to
Yeah.
pay the bill. I'm like,
Yeah. Yeah. And
terrified.
they're getting worse, to be fair. I mean, the government's
Mm,
needs some cash. So the ATO's got
right.
record debts on their books. And so they are collecting
Wow.
pretty aggressively at the moment, is my experience.
Yep.
It's harder to get payment arrangements over the line. Certainly if if you're consistently late or defaulting, then it keeps getting harder and harder.
Mm,
So I wouldn't get in that. I try and avoid getting in that trap.
yep.
The the worst thing you can do is not think about it. Like you can
Yes.
put your head, you could pretend that it doesn't exist and go and trade your business, etc. It'll just accumulate in the background.
Yeah.
Then what happens is at some point you get to, like, let's say you've got 6 months of GST that you haven't paid. You've already spent that money, it's gone, right? So
Hmm.
now out of your current quarter, not only do you have to fund the current quarter's GST, you've also got to fund the previous period. And so
Yep.
you're going to be in this cycle that will be hard to get out of, particularly if margins are tight and cash flow is tight.
Yep.
The better answer is just from the very beginning, understand your obligations, understand how much and track it, and then put
Hmm.
that cash aside first before you go and buy inventory and stock, etc.
Yep.
Because if you do that, you'll have healthier cash flow and you won't dig that hole that you then won't have to,
Yep.
climb out of someday.
I personally now, I actually just have a direct debit going straight to the ATO every week, right?
Yeah.
Based on
Yeah.
what it roughly is on my own pay as you go tax as an employee of my company, and
Hmm.
also what the GST component is that I've sort of calculated. And worst
Yeah.
case situation, I have to just top it up rather than getting a huge bill at the end of every quarter. And that works for me because sometimes if I see the money, even if it's in another account, I'm like, oh,
Yeah.
look,
Yeah. Can be tempting.
can I
Yeah,
spend that on?
absolutely.
Exactly. And one thing I know too is that, and I don't know if it's still the case, you know, yes, people go, yeah, but you can get an ATO payment plan, right? So if
Mm.
you do get this debt, then you can get a payment plan, but that payment plan comes with a whole lot of other consequences that you don't necessarily realize. So we're just in the process of renovating. We're doing almost
Mm.
$600,000 worth of renovations here. And I know a year ago when we went to apply for the finance, I think we
Yeah.
had like a very small ATO, repayment plan of like $3,000 outstanding, and we had to pay that off before we could
Yeah.
apply because it's
Yeah.
like just a big red cross in the eyes of a financial company or a bank when it comes to trying to borrow money for something, right?
Yep.
So that was something that I was unaware of, but I'm hyper
Yeah.
aware of now. So for me, I will never, ever, if I can ever hope to avoid it, have another ATO payment plan of any kind. And they're usually not particularly very cash flow friendly. They're usually like, you can pay us $4,000 a month, or
Yeah. I mean,
$8,000 a month in a
and
very short
and
space of time.
they're getting worse too. And not only
Right.
that, these days, I mean, the interest cost on them is like 10% or something, but they've now
Oh,
made
is
it
it?
since
Oh
1 July,
God.
they've made that interest not tax deductible either. So
Wow.
it's like all compounds and it's worse. Now, like
Yeah.
people get into payment arrangements all the time, right? And in some instances, people use it as like effectively like a short-term funding. Now, the ATO, they're not fans of people using them like a bank.
Mm.
Um,
Hmm.
there's it's not always the end of the world to have a payment arrangement, but you have to do it with the visibility over it and the understanding and be educated about it so that you're
Mhm.
making a good decision about whether that is right for the business or not. By not making a decision or not dealing with it and then it accumulating and then you've got no choice, that's when it's like, okay, well, this is going to cause some problems here.
Yeah. Yeah. So anyone listening, so far you've got a little bit of homework. Make sure you have at least a Xero file or a QuickBooks, some sort of accounting
Yep.
file set up. You need a spreadsheet to be calculating your cost of goods sold or your landed costs, which we're going to link in the show notes. Matt's got a template for us.
Yep.
What else? We want to make sure that you are really watching your margins and you're considering things like GST, like all of those other costs, insurances, transaction fees, afterpay fees, all of those kind of things, right? Now, what I know we were chatting offline a little bit about this and also on the training with my mastermind clients. We a really interesting concept, which I think most e-commerce founders are not over at all, is this break-even point. Can you
Yep.
talk a little about what that is and how we would actually figure that out?
Yeah. So your break even point is basically the point at which your sales that you make cover all of the costs associated with running that business. The um, Ideally, you want to make more than break even because that means you're making a profit. But the starting point is to understand what is the target for your weekly or monthly or even daily sales to cover all of your costs. The way that we work that out is the starting point is we've got to figure out what your margins are. So we have to say, right, what is your, and the margins we report on, everyone calls these different things, but they're more or less the same concept. We say, what's your sales? We take off your cost of goods sold. So that's everything associated with producing that product, delivering it to the customer, et cetera. So the landed cost of the product, the merchant fees, the outbound freight, 3PL fulfillment costs if you've got them, refunds and returns and that sort of thing. That gives you the gross profit for the business. Then you take off the other variable costs like your advertising spend. So in order to get that customer, you have to not only get the product, you've also got to buy the customer. So you take off the direct ad spend and that gives you your contribution margin. That contribution margin will tell you for every dollar you sell, how much profit is left over after all of your variable costs. So all the costs associated with producing and selling and sending that product out, etc. So let's say you have a product that you sell for $100 ex GST. You have a 35% contribution margin, so you make $35 on it. The question then is, okay, well, if we've got, I'm going to pull my calculator up for this because I'm not doing
No
mental maths
worries.
on a Friday morning.
I know it is
Let
Friday morning as we chat,
It is
guys.
a Friday morning. So let's say
Yeah.
you've got $10,000 a month of overhead costs. Now those overhead costs are rent and insurance and I don't know, accounting fees, even things that are fixed costs that don't change with the volume of your sales. And the other we're going to be subscription costs for most
Mm-hmm.
Shopify stores. So let's say it's $10,000 per month. If you're making $35 every time that you sell a product, you need to figure out how many products or how many dollars in sales you need to make in order to cover that $10,000. So
Got it.
in this case, if you're making a 35% margin, you need to do sales of $28,500 or thereabouts in order to break even. So your break even point in that time is 28 grand worth of sales, assuming a 35% margin. And the way you calculate that is you say, what's your fixed overheads? You divide it by that contribution margin percentage, and that'll give you the top line sales. So that
Interesting.
business needs to sell $28,500 just to cover the cost of running that business.
It's
Then
a,
you can go and say, right, well,
mm,
how much profit do I want to make? And you figure that out.
yeah.
How much do I want to pay myself? All those sorts of things.
So my accountant calculated for this break even point for me when I had my fashion brand, when I had about 6 staff and an office, and it was
Mhm.
terrifying. It was
Yeah.
really, really eye-opening and really
Yeah.
scary. And it highlighted to me so many mistakes or missteps should I say, that I'd made in my business that had contributed to these really high overheads, which then
Mm,
really smashed my cash flow and then put this pressure of like, now you have to maintain this level. I think it was like 70, 80 grand worth of sales every month just to
yep,
pay the bills.
yep,
And it's something that I've been very vocal about with on my podcast and with my clients as well about please be really mindful about committing to these big expenses and big costs because when sales dip, maybe it's a seasonal business that you have in winter, for example,
yeah.
that break even point is like a lot of a lot of stress to add to an already stressful business. So I
Yeah.
guess for me, I would love like I'll share with you what I see as these cash flow killers for businesses that are scaling, and I'd love to hear what you see as well. But for me, and this is from personal experience and from working with other clients, when things are going well, and it's usually when things are going well in prime season, so you
Yeah.
ladies fashion brands, summer's our peak season, so sales are really high, everything's going great, and we make decisions in that moment thinking
Yep.
that that's what it's going to look like every year and that it's going to keep going up, right? And then these decisions, in my case, and then I see in other people's cases too, is like, yeah, it's time. It's time for a warehouse or it's time for an office. And then
Yep.
you get the office or the warehouse. And then next thing is like, okay, well, now I need staff to fill it. Now's the time
Mm,
to go and make these decisions and hire all of these staff. Or now's the time to go and get a Range Rover.
yeah.
Or whatever it
Yeah.
might be, right? Like these are literally the mistakes that I made. And in the peak season where things are going really well and not really understanding that break even point, and then
Mm,
what happens come winter, or if there's an economy dip, which we've experienced, these past years since COVID, like we don't want to put ourselves in a position where we have to, I don't know, lay off staff, try and get out
yeah.
of leases, selling the beautiful car, or getting to a point where you hate your business and so stressed that you just like want to blow it up, right?
Yeah.
So, are there any kind of cash flow or even profitability killers that you see people perhaps jump into maybe without a lot of thought?
Yeah. I think the big ticket items, like you pointed out, are generally rent and staff. I mean,
Mm,
most of the time, the rest of your overhead costs are, software and other sort of essentials that you can't turn off. Like you have to have them
hmm
to run your business, right? You can't not pay Shopify or so. Usually, the big ticket items come from wages. Cars is
hmm
is a perfect example of spending people spending unnecessarily. Um, and I think that there's nothing wrong with having those costs, but again, you have to make sure that they're working for you.
mm,
All too often, we see clients where they have these great businesses and sales are going up and there's cash flowing around, and what they do is they put more people in and put more costs into the business, and actually all they're doing is they're just making those people more money instead of actually taking some
yeah,
out for themselves.
yeah,
Um, when you've got things like staff, for example, you just need to make sure you understand what is their role, what are my expectations in terms of what are they going to do, how do I measure whether they're doing that well, what is the
mm,
return on that investment that I'm going to get, etc. So
yes,
more often than not, we see people put staff into a business without properly setting the expectations or understanding the KPIs for that staff member, and then they go and run this business and they realize, well, hold on, I'm the owner, I'm still generating all of the revenue and all the profit. And then you look at it and you go, what are these guys doing?
mm,
And part of the problem is actually just never set the expectation at the beginning or didn't calculate, what do you need out of these people?
yeah,
The other part of it is, like you said, you just understand the break even before you make those calls. So in
yeah,
that example we said before, if we've got a $10,000 per month cost that needs to make $28,500 of sales, given their 35% contribution margin. If you said, well, I'm going to go and employ somebody for $110,000 a year, $120,000 a year, sorry, you've just gone and made your costs from $10,000 a month to $20,000 a month. Now,
yeah,
if we go and say that instead of doing $28,000 per month in sales, we now have to do 57.
exactly,
So then you
exactly,
go,
and has such a huge impact, right?
yeah, absolutely. And so then you've got to make a judgment call at that point about do you go and make the investment in that person and will that person be able to generate that extra $28,000 plus to make a profit?
Hmm
Um, the other thing I'd say from like a mindset perspective with business owners is business owners often in my experience, grow their business for the sake of growing a business. So they say, I've got to get to $1 million of revenue, or I've got to get to $5 million of revenue, whatever. And you're trying to hit these targets for who knows what reason, right?
Yeah.
Because they sound cool.
Ego or
Maybe your ego. Yeah, exactly.
yeah.
The reality is you run a business to make a profit. You're putting in your time, you've probably sacrificed a wage, or you've put in your own cash to grow this thing. It needs to generate you a return. So
Yeah.
before you go and incur these costs and pay somebody else your profit, I'd be thinking about, well, okay, well, hold on a second. How do I make sure that I'm extracting profit out for me and my family so that we're covered and all this effort I'm putting in is worthwhile? So that I
Exactly.
think is an interesting one. And like even in my business, it's completely different because we're service-based business. So our cost is just like 90% of our cost is wage. I could just keep employing people to make my life easier, but every time I employ somebody, I give them a chunk of profit that I could keep. And so for
Exactly.
me, it's really important to understand every time I employ somebody, what is the benefit to me personally? What profit are they generating for me and my family to make that investment and that risk worthwhile?
Absolutely. It's something I see a lot with clients is that they'll have all of these staff, whether they're a contractor or freelance or however which way that they're hired, and they've been in their business for years, but they're not actually paying themselves anything.
Mm,
And I always, it's a fine line again, right, between having help so that you can do the revenue producing tasks in your business and not be completely overwhelmed with all of the, other bits, but
yeah.
also you want to be paying yourself something,
Oh
right?
yeah.
Because otherwise you might as well go and get a job. It's a lot less
Exactly.
stressful. So when do you think is the right time for someone to start paying themselves, even if it's just a small token amount, but to start getting into that habit of treating yourself like an employee of the business where I deserve to be paid every week?
I think from personally, this might be controversial. I think from the very beginning.
I do too. I do
Now,
too.
I that's going to be hard because everyone's going to say no. Well, I'll pay myself when I get to 500,000 or 1 million or whatever. But if your margins can't support paying you
Mm,
now, they're not going to be better at 1 million. There's just going to be an extra
yeah.
zero on the end of it. So you
Yeah.
actually need to build in healthy margins into your business that produce free cash flow, and then you can pay yourself. Now, that might mean that you can't grow as quickly because you're not putting as much into inventory or ads or what have you, but your business will be more sustainable. Um, the other thing I think is if you pay yourself and you get that money out, you can then make a decision about whether you put it back in. So
Yes.
maybe you do reinvest it, but the mindset shift of I'm just not going to take anything and I'm just going to spend all the money in my business versus I've put money into my personal bank account that is funding my mortgage and my kids' school fees and all the other
Mm,
things. Do I want to put that back in? I'd say the decision generally is going to be no.
yeah.
And so I think the mindset shift in terms of like forcing your business to be able to afford to pay you means you're going to have a more sustainable business with better margins that's going to have more longevity in it. And you're going to get something for the risk and the effort that you're
Exactly.
putting into it.
Yeah. It's something I see so often. People are 5 years into their business and they're not paying
Mm.
themselves anything.
Yeah, it's crazy.
So, yeah, it's like why we start this business basically create a career on our own terms. But you know what? You shouldn't be working for free. I
No,
want to finish. I want to finish with the one final $1 million question,
sure.
if that's okay. This is a question I get a lot,
Yeah.
and I want to see. I want to hear what you think about this. When can a business owner expect to start seeing a profit in their business? How many years do you think this looks like?
I don't think there's anything stopping someone from seeing a profit from the first month.
Awesome.
Well, and so the clarification I'll make there is a difference between a profit
Hmm.
and free cash flow. So you
Okay.
can have a profit on paper, but you don't have any cash. And the reason is
Got
that
it.
your cash is gone into inventory and it's gone to things. So you should have a profit from day one. And the reason is to have margins that support that profit.
Yeah.
right? You're then going to go and take that profit and reinvest it into more advertising for next month or more stock for month 3 and month 4. So it's going to feel like that's gone, but you should have a profit. If you don't, you actually are just going to dig that hole where you're spending
Mm.
money that you
Mhm.
don't actually have. And that goes to Mex credit cards or ATO debt, or you putting money in personally. So
Yep.
profit, I think probably the distinction to make is what is profit and what is free cash.
Yep.
And I think you should have a profit from the beginning because it means your margins are healthy.
Yep.
I think that the free cash flow comes down the line, but that just depends on your choice about how aggressively you want to grow this business. So for me, like me and my business, I didn't take much out of it. I always paid myself something, but I didn't take much out of it for the first couple of years because I was putting it back into new staff and growing because I wanted to grow more aggressively.
Mhm.
And I made that conscious decision. And then we got up to, where I was always paying myself something. And then it wasn't until year 3 that I probably paid myself a wage that was a commercial market rate wage because
Yep.
I got out the other side of it, right? But I
Yep.
think that you should be paying yourself something from the
Day
beginning.
one. Yep.
Correct.
And I love that distinction between profit on paper, the bottom of
Mm,
your profit and loss, and actual cash flow, right? Because I think people do think that's one of the same. And I know it's always a bit of a rude shock when you do your tax return. You're like, but my profit and loss says I made this much money, but my bank account is
yeah.
empty. Like
And
they're
they
two
never
different
they
things.
never will. And the thing that I'd encourage people to do is in Zero or QuickBooks as well. Zero is a bit
Hmm.
easier to format. You can run a cash flow report that shows you what your cash is. Um, we're going to do we've got a YouTube video coming on that. It'll go up on the channel. So
Awesome.
I might even record that today if I get the time.
Great. We'll put that in the show
That
notes as well for everyone to
Yeah,
watch.
that'll
Yeah.
show how to format the cash flow, and the cash flow will show you here's the things that are P&L: income, cost of sales, overheads, and then here's all the things that are cash that don't go on the P&L: loan repayments, inventory purchases, um, like ATO
Mm.
liabilities, those sorts of
Hmm.
things. You should, in my opinion, you should be running a P&L and a cash flow
Yep.
on, I don't know, minimum a monthly basis.
Yep. I love
Yeah,
that. I know. And the cash flow statement was something that I've never checked until you did the training with us in the mastermind. So
yeah,
that was really interesting because, yeah, you're so right. Your profit and loss doesn't show things like, repayments of loans or whatever it might be. There's a lot
yeah.
of things that aren't included. So thank you so much for being here today. Thank you so much for sharing your knowledge. And I hope for those listening, this is a very gentle nudge for you to make sure you have a look at your taxes. We don't want to bury our head
Yeah.
in the sand. Make sure that we are setting ourselves up for the best chance of success by having those different tech stack, which we'll also share in the show notes as well, and just really getting to learn how to look at your numbers, how to read your numbers, because your numbers are ultimately going to be what helps you scale and succeed in this business
Yeah.
or is going to cause you to fail. So it's so, so important that people start really pulling up their sleeves and digging in and getting to understand how to read the data. Thank you
And
so
just
much.
be the thing I'd say on that, just be curious. You don't have to know the
Mm,
answers. You're not going to be an expert on the first day. It will be overwhelming. But if
yeah,
you're curious about it, you will gradually learn. You'll ask the questions, you'll get there, and you'll have a much better time running your business than you would with your head in the
absolutely.
sand. Yeah,
And knowledge is power. Even if the numbers don't
correct.
look great, at least knowing
Yeah,
what they look like will help you make better decisions in the months ahead. So,
absolutely.
so yeah, I hope this was helpful. Thank you again, Matt. And like I said, we're going to share all of his links on how to get in contact with Matt and how to work with him. And yeah, I really appreciate you being here. Thank you so much.
Perfect. Thank you.
Thanks, Matt. Thanks so much for listening to this episode of Online Store Success with me, Jody Minto. If you loved it, please share it with your friends on Instagram and tag me at I am Jody Minto so I can say thank you. And if you really want to make my day, please go ahead and leave me a review on Apple Podcasts and give me a follow. If you'd like my help in starting or scaling your online store, be sure to check out my free resources and programs at jodyminto.com. Thanks again, and same time, same place next week. Bye for now.